This might be the most important video you'll watch this year. While the headlines focus on distractions, there is a seismic shift gaining momentum happening in the global economy that has already impacted your savings, the cost of living, and your financial future. Yes, I am talking about the collapse of the dollar, a process that is in progress right now and accelerating each and every day. But as this process continues, we move closer to a defining event, a currency reset that will reshape everything as we know it today. I just spoke about this threat at the VRIC conference, which if you're not familiar with, I highly recommend you check out. But this threat is far too urgent to stop there. In today's video, I will break down what is driving the dollar's collapse, how this process is unfolding today, and most importantly, how you can use this information to protect yourself and your loved ones. But before we dive into what's driving the collapse, it's important to first understand why the dollar's role is so central to everything. And do not skip this foundational step, as I will be building upon it next. Picture the global economy like a giant marketplace, and the US dollar is the only currency that everyone agrees to use. No matter where you trade, anytime you buy or sell, you have to use dollars. For the US, it's like owning the only ATM machine. Every time someone needs cash, they have to come to you. But this monopoly has given the United States immense privilege and power. It can print dollars endlessly without immediate consequences. It can borrow cheaply because everyone trusts the dollar, and global demand keeps the dollar's value propped up. But what happens when the vendors decide they don't want to use your ATM anymore? That's the shift we're seeing today. Suddenly, printing a ton of dollars becomes extremely dangerous. Borrowing costs go up, and a weakened demand means a weakened value for the dollar. This would make life far more expensive for everyone. Right now, the dollar's value is fueled by higher interest rates, with investors chasing better returns. But this temporary illusion of strength for the dollar is nothing more than a band-aid covering up a gaping wound, representing a much bigger problem. In the last 25 years, the dollar as a total share of foreign reserves has dropped by 15%, with an extreme acceleration of that happening in the last 5 years. But this isn't random. There are powerful forces driving this forward. So what are the 4 primary driving forces of the dollar's collapse? Number 1, unsustainable US debt. Now, it might sound strange, but the biggest driving force of the dollar's collapse is the United States itself. Imagine the US is like a business owner who's been spending way above their means. They keep borrowing to keep their business running, and investors, other countries, keep lending because they think the business is reliable. But now the debt is so high that those investors are starting to worry. They are realizing that there is no plan to pay it back, leaving the business owner with 2 bad options. Number 1, create more shares to cover the debt, but that dilutes all of the existing shares, so no one will be happy with that. Or number 2, risk a complete collapse of confidence by defaulting on the debt. Your business goes under and no one invests with you again. Now, most likely, this business owner is going to choose option number 1, but eventually option number 1 will lead to option number 2. And this is where, when people tell you the United States will never default on their debt, what they don't understand is that the United States does not have to default in order to lose its power or position. In fact, printing an excessive amount of dollars leading to inflation and hyperinflation will achieve the exact same loss of confidence. But here's the problem. The same way those investors got savvy to the business owner who had no plans to pay back the debt to just keep borrowing more and more, the same thing is happening with the United States. Politicians on both sides have no interest in actually tackling the debt because it does not immediately benefit them, meaning that the debt keeps growing and the risk keeps growing with it. But unsustainable debt is just one piece of the puzzle, which brings us to driving force number 2, weaponization of the dollar. When we think about America's power, we often picture missiles, guns, tanks, but the most powerful weapon of all is the US dollar. It's a silent, invisible weapon that can be used against almost every person in every country in the blink of an eye. But over the last few years, it has become far less invisible. Let me take you to February 26, 2022 at 5:13 p.m., when the United States imposed sanctions on Russia in an attempt to deter their escalation of the war with Ukraine. Now, on the surface, it might have appeared like any other sanctions, but this time was different. While the U.S. had enacted sanctions before, freezing foreign assets in American central banks, this time, the United States froze assets in Russian central banks. Now, imagine the difference between someone who owes you money, not paying you the money that's owed, which is bad enough, versus someone coming into your account, into your home, and taking your life savings. That is exactly what happened here. But then the U.S. went a step further, using its power to rally global support to use the proceeds from those seized assets to fund Ukraine. Now, whether or not you agree with this move, this moment in time, this precise moment will be viewed upon as a pivotal turning point in the dollar's collapse, because it was at this exact moment when it was proven to the rest of the world that holding dollar reserves was a risk, not a safeguard. Which brings us to driving force number 3, geopolitical alliances. Now, make no mistake, the push to move away from the dollar isn't new. It's been simmering for decades, as countries have long wanted a more equitable financial system, one that doesn't so heavily favor the U.S. and its Western allies. But here's the difference. What was once just frustration is now action. Enter BRICS, a global alliance of nations led by China and Russia, including India, South Africa, and others, who are laser focused on dethroning the dollar. Their goal? To shift power more equitably to their economies and reduce the threat of weaponization of the dollar. And to do this, they are already trading more in their local currencies, creating new payment infrastructures, and leveraging their vast commodities to reduce reliance on the dollar, both in terms of reserves and trade. Now, some are quick to dismiss the BRICS alliance, claiming that these countries historically have not been able to work together. But most anyone can set aside their differences if your shared goal is big enough and the stakes are high enough, both of which are true, as evident by the fact that the BRICS membership has now doubled in size to include 10 different nations, with a waiting list of over 30 applicants.
BRICS Pay, touted as an alternative to the US dollar, has the potential to revolutionize global finance by allowing BRICS nations to make cross-border payments more efficiently using their own currencies.
But what's most interesting about these new members is who they are and what they represent. For example, the UAE and Iran, both major oil-producing countries, are now BRICS members, which calls into question the petrodollar agreement, or the foundation of the dollar's dominance. See, since the 1970s, almost all crude oil has been traded exclusively in US dollars, creating a relentless demand for the currency and propping up its value when, in theory, the dollar should have crumbled like Weimar Germany or Venezuela decades ago. But now, cracks are forming as Russia and these other countries start trading oil in other currencies. Even Saudi Arabia, the crown jewel of the petrodollar agreement, while still loyal to the United States, has been meeting with BRICS nations and hinted at the idea of pricing oil in other currencies. If the petrodollar agreement were to collapse, the dollar would likely collapse with it, causing chaos throughout the world. Now, most likely, this is going to be a gradual process, not an overnight event. But at this point, someone inevitably always asks me, okay, I understand what you're saying so far, but why would countries want this to happen? Especially because it's not like another currency could take the dollar's place, which on the surface is true. Not the won, not the rupee, not the euro. No other currency comes close to the dollar because the United States has the largest economy. The dollar is integrated into all global trade, and no one has as much liquidity as the dollar. But this argument is outdated. It does not take into consideration the new tools that are available on a global scale. Which brings us to the final driving force, number 4, advancements in technology. The same way that the internet revolutionized the way that people do business, central bank digital currencies, or CBDCs, are revolutionizing the way that countries do business, allowing nations to bypass the dollar completely. These digital currencies and new payment infrastructure allow countries to settle cross-border payments without relying on the dollar or Western-controlled payment systems such as SWIFT. But this isn't a hypothetical, it's already happening, with China leading the way and other countries like India and Russia closely following suit, which means that the future of global trade does not require one global reserve currency. No, CBDCs will make it possible for countries to trade in their own currencies, instantly completely bypassing the dollar. In fact, with 134 countries representing 98% of global GDP already pursuing some form of CBDC, this is not a distant possibility. This reality is closing in fast. But this shift isn't happening in a vacuum. CBDCs, BRICS, the petrodollar, the US's debt crisis, all of these are interconnected threats that are chipping away at the foundation of dollar dominance. And that's the key. The dollar collapse is a process leading to a single seismic event. Right now, we are in that process. As the dollar continues to lose its standing as the global reserve currency, as its dominance is chipped away, the dollar will be worth less and less, meaning that inflation will increase, leading to hyperinflation, and eventually leading us to a currency reset, which will reshape the global economy and impact every single aspect of our lives. Because during a currency reset, they will revalue the dollars in your wallet. They already will be worth next to nothing because of hyperinflation, but whatever value you do have, you can say goodbye to. Typically, from looking at other countries who have undergone currency resets, this valuation could be 1,000 to 1, 1,000,000 to 1, which means that if you had $1 million in your savings account, overnight you would wake up, the United States government would tell you that your $1 million is now only worth $1, 1,000,000 to 1, and there would be nothing you could do about it because it's completely legal for them to decide the value of the currency. Only those who had the foresight to protect themselves before this event would have their wealth retained, but it's not just about preparing for that single event. As I mentioned, this is a process that is escalating daily, which is why it's no coincidence that over the last decade, central banks have been buying gold at a record pace, gaining momentum year over year, because they understand that as we move forward in this process, as we move closer to a currency reset, gold, an asset that cannot be inflated or printed away, will be the true foundation of our new financial system. Let me put it this way. The dollar has been the global reserve currency for 81 years. Gold has outlasted empires, countless currency collapses, and every economic crisis. The threat of the dollar's collapse is inevitable, but it's not inevitable that we face it unprepared. By understanding currency life cycles, by understanding where we are today and what's coming tomorrow, what the wealthy elite are doing to protect their wealth, we too can set ourselves in a position of power so that we have a plan in place to not only survive, but thrive through this crisis. If this is resonating with you, if you are concerned about any of this, talk to one of our expert analysts. They have helped me more than I can say. And if you want to understand how we can help you too, call us at the number below or click the Calendly link in the description. And if you have a loved one who would benefit from understanding this information, please feel free to share this video with them. And as always, I so appreciate you being here. I'm Taylor Kenny with ITM Trading, your trusted source for all things gold, silver, and lifelong wealth protection. Until next time.